Hi, welcome to the Market Alert for Wednesday, the 31st of December 2014. And starting off with a 5-minute chart, so we can see the market opening, driving prices higher all the way up to the psychological 18,000 level. So the market dropping below this during the pre-market session. You can see there prices held, but then they came back through and then they found resistance. And once the support is broken, it always becomes a resistance level for the market to move back. So prices moved back up to this level with a buy signal prior to the consumer confidence figures that were released at 3 p.m. So you can see the market trading all the way up until we get to 3 p.m. here, 14:55, and then you see the news released here. Now what's interesting about the news is that yesterday the forecast was 88. Sorry, the previous was 88 and the forecast was going to be 94.6. They've revised the figure in the pre-market session, and then it only came out at 92.6, so it made the 94.6 look rather overestimated, so that the market then had a negative reaction to it. So again, something you want to watch with these figures, because they will do this, where they will make a revision before they release the actual figures on the previous. They'll do an audit or whatever, revise the figure and say, you know, look, it wasn't actually 88, it's 91. So that's why the market reacted this way. It's a high impact news item, and as I said yesterday in the market alert, it was the only high impact news item, so it was going to be used. So in this situation, knowing that the news is going to be coming out at 3 p.m, then you need to make a decision whether you're going to stay with it or not. The maximum on this trade for yesterday was around 15 points, if I recall. Let me just bring up the right tool there. So there's the entry price up to the high at 14.55. It's actually 18.58, so nearly 20 pips there for this trade before the market reversed, and then we see prices move lower. So prices head south after the market wasn't too happy with the figures. We had a potential sell signal. You see the market only just filling this signal, and then the market finding support, not going down to the 17,950 level, but just trading in that sideways range. And once you get into this during a holiday period, you might as well take the opportunity to exit stage left, as it were, with break even or a modest loss, because of how quiet the market. So you can see the volume just completely fell off until we got around to 16.20, and then we saw a bit of buying coming into the market there. But this didn't even drive the market that much higher. We see the price is still trading sideways and choppy. We then had a buy signal come into the market there, so had you taken this one, it would have mitigated the loss on the other by about 5 points, 6 points. And again, we get back into this sideways, and you can see it gets even worse through the early part of the evening. A bit of selling coming in there, but then the market reverses and prices move higher, and once again we get a sell signal, which did go on and trade down to the 17,950 level there. So when the market actually booked its ideas up sort of early evening, 7 o'clock-ish, you can see there the market starting to see a bit of activity, and then from there we saw the market trade back up to the 18,000, where currently we're back above. So you can then see, as I said before, once the market breaks back, you can see that they wanted to go south, but then they brought it back, and ever since it's played with the psychological level of 18,000, which has now become the support level. So in the daily charts, you can see there the market really very, very quiet, stuck in this sideways range of about 100 points. In the day session, it's been about, let me just mark this up for you. So we've got the all-time high there, and if we go across from there and then remove this one, oops, that's the wrong one, and I put the all-time high back in there. What I was after is this one, just to narrow that down a bit. There we go. So there you can see that it's just over 100 points in range, But the markets in the last few days have only managed around 50 to 60 points, so very, very quiet, which is unusual because during that Christmas, New Year, the market can actually give some very good trades. But obviously, it's not to be this year at the moment. But you never know. We've got today, which is, of course, the last trading day of the year, so we'll see what happens. On the news front, I don't think there's anything from the US that's high impact. We've got Chicago PMI, unemployment claims, and then pending home sales. They're out at 3 p.m. They're forecast again to show a marked increase there from minus 1.1 to 0.6. But again, we'll just have to wait and see. On the implied volatility, up from 11.74 for yesterday to 12.22. So again, it's not really dropping. So the market must be sensing something if the implied volatility isn't actually dropping at this time. So it'll be interesting to see what happens on Monday when the markets return to normal. Right, that's it for this morning. I will see you in tomorrow's edition. Like I say, for today, it's going to be a pretty lackluster day. I can't see it really being that good, but you never know. Trade with caution would be for today, and then tomorrow, of course, the markets are closed anyway. So I will see you in Mondays or possibly Tuesdays, give the market a chance to get itself sorted in during Monday's session. Then we'll take up from Tuesday. So wishing you all a happy new year and all the best for 2015. And once again, just to say thank you very much for your support during 2014. I don't take it lightly. And I will see you in 2015. Have a good one.